We're in Bitcoin Miami 2022. Today we have Hany and Ophelia. Can you both please introduce yourselves?
Absolutely. I'm Hany Rashwan. I'm one of the two co-founders and the CEO of 21 Shares and Amun.
I'm the other co-founder and I'm the president of it.
Awesome. So what is 21 Shares and Amun? Like, what are you guys hoping to achieve?
So we just want to make crypto more accessible. We're focused on bringing the next $1 trillion into the asset class. And it's going to come from institutions, it's going to come from non-crypto native retail, and it's going to come from around the world. So under our 21 Shares brand, we've built the world's largest ETF issuer in the crypto space. And so we have more products and more AUM than anyone else. We also built the world's first crypto ETF back in 2018. And then on the Amun side, and it's geared more towards a more international crew so that it's accessible across the world, we do very similar things but in token forms. And so you can buy potentially an index of all of DeFi, either as an ETF or as a token.
Awesome. So we'll start with 21 Shares. How big is it? How much do you guys have under AUM? And like, what kind of products do you guys offer?
So we just announced our 30th product yesterday, which is a sandbox ETP. They're varied. They're all over the place. Do you want to talk about some of our fun products?
Sure. Under the 21 Shares brand, we cover somewhere between 20 and 30 different coins, ranging from metaverse projects. We both have decentralized and a sandbox product. We have DeFi products. We have the big crypto blue chips. So obviously Bitcoin with Ethereum, as well as a bunch of indexes. So you can get diversified exposure. You can get single assets on essentially anything you want to invest in the crypto space.
And I want to ask, because most people know what ETFs are, but what is an ETF?
It's a really non-sexy answer, but in Europe, the way that regulations work, any ETF that's not diversified by their rules is called an ETF.
Okay.
Basically, in Europe, gold and silver and other commodities operate as ETPs, whereas in the US, they operate as ETFs, but they are synonymous in how they're built.
Okay, awesome. And I saw that you just mentioned you launched the sandbox product. So what do you guys do to stay ahead of the curve, to stay ahead of competitors, and how do you pick these specific trends? Like we see DeFi, NFTs, metaverse and GameFi, and how do you guys stay ahead of the competition? And how do you guys choose those products?
We're very much a research-led organization. One of the first decisions Hany and I made when we started the company was that we were going to publish high-quality, free research to help get people into the space. That was the entire ethos of the company, right? If we want to bring the next $1 trillion into the space, well, those people actually have to know what's going on. So we spend a lot of time and effort doing that, and through that process, we actually pick names, and within the confines of what we can do from a regulatory perspective, that's how our development process works.
We're very content-driven because a huge part of this, especially outside of conferences like these, which are wonderful events but are niche and siloed, in order to convince the institutional investor whose average check size might be $1 billion or $5 billion, to convince the pensioner, to feel safe investing in this and to get a vehicle that is accessible and affordable, etc., takes a lot of education. And so from that, we wanted to build our organization on research, on sharing knowledge, and doing it very much free. Knowledge oftentimes is siloed, knowledge oftentimes is behind paywalls or other blockers, and we just wanted to take all of that out of the way. And whether you want to buy our product or some of our competitors' products, we will teach you about crypto, because ultimately a great tide will lift all boats, and that's our philosophy as a company. But it served us well, and we're still the world's largest crypto ETF issuer to this point.
And I would add, in the last few years that we've gotten to see, which I find most exciting, is we had clients who came to us literally asking questions like, what is a blockchain? Super basic things, like why does decentralization matter? And we've seen them kind of grow from there to buying their first Bitcoin products with us, into buying multi-asset strategies, into buying increasingly esoteric things, into buying their first NFTs. Most recently, they came to us and asked us for a comparative analysis between Decentraland and sandbox, and we're happy to get into that.
And there's a lot of that. There's a lot of, because if you think about it, back in the day, how did you discover crypto? Was it Bitcoin?
It was Bitcoin.
And it was the rabbit hole that then introduced you to everything. And so in the same way, we look at our Bitcoin ETP as just the rabbit hole that will introduce you to the rest of the space. And the unique thing about it is that the deeper you go into the rabbit hole, we are able to go with you every step of the way. And so if you want to get into Solana or Polygon or Ethereum and you want to really get into it, well, we have Solana tokens and we have Polygon version tokens and ERC20 tokens. And so we've done this where we've had a few family offices start with a very vanilla Bitcoin ETP and then migrate to more advanced, more complex strategies on the ETF side, and then also be able to custody tokens.
So you guys are there along the whole way. And let me ask you this. So NFTs have been just booming. We saw Visa buy CryptoPunk. Do you guys plan on buying any NFTs or fractionalizing any NFTs or making any sort of product or index for that sector, as it's just super hot?
We love NFTs, and we think they're here to stay. We think they provide a tremendous amount of value for artists, and a lot of potential creative things that we haven't even thought about are probably going to be possible and to happen. We're thinking really hard about how to do it. It's tricky in an ETF format because it requires daily liquidity. And so at any point you have to be able to redeem and sell the entire pool if need be. And obviously with something that is a little bit less liquid than Bitcoin or Ethereum, it would be tougher. But we're exploring and we're thinking about a lot of things there.
Awesome. So if we move on to Amun Tokens, how large is it? Did you mention the AUM for 21 shares?
It's about 2.5 billion.
2.5 billion, very impressive. What's the TVL for Amun Tokens?
Tiny. So Amun Tokens launched just this last fall.
Okay.
Millions?
Still very
very
impressive.
We wanted to set up the infrastructure on the ETF side first, and we wanted to do it as broadly as possible. So we're in Europe, but we're also expanding to Australia, we're expanding to the Middle East, we're expanding all over the world. And then we wanted to replicate that in the parts, specifically in two different groups of people. The parts of the world where our ETFs are inaccessible. So there's a lot of very strong economies, Malaysia or Indonesia, for example. For the foreseeable future, we're not going to list on the local stock exchange. And even if we do, the access to the stock exchange might be low. But we want to target those people, and we want to give them, at the end of the day, professional, affordable, high-quality products that they can use to access the crypto world. And then on the other side, you get a lot of, let's call them more tech natives that would prefer having it in a MetaMask wallet than in a brokerage account as an ETF. Like yourself, frankly, like a lot of us, like my cousins, and so we wanted to, the ethos of the company, and we do this under different brands, and we will continue to do this under different brands. And we'll release more as well in the future. But we do it for different audiences.
Awesome. So you mentioned...
And there's something to be said for products that can only be in tokenized products.
That's a very good point.
And so there are products, some of the products that Amun Tokens, certainly ones that have come out in the market already, fit the description of what Hany's talking about. A lot of the new stuff we're working on, a lot of where we spend time is how can you actually do better? There's a lot in the traditional world, and I really like financial plumbing. It's fascinating, but it's clunky and cumbersome, and it doesn't always work or respond the way you want it to, and it limits you in a lot of ways in terms of how creative you can be with what you're building. That is not true of smart contracts. You can do a lot more there, and so a big part of how we think about the Amun Tokens part of our business is, well, what can you build that can't be built in any other way?
Yeah. You mentioned expansion, but I want to ask first, if anybody buys you today, you guys are backed by the actual cryptocurrency. So if somebody buys the Bitcoin and backing it by Bitcoin, can they ever redeem that Bitcoin?
They can redeem it. There are mechanisms in place for that. And if anything, we want to make it easier. We want you to be able to switch from our ETF to the underlying, to tokens, and back within our same ecosystem. Because the philosophy of the company and what our mission really is regardless of where you are, what kind of product format you need, what you're looking to invest in, there will be a product with one of our names on it that you know is professional, affordable, and really high quality.
I saw that the SEC rejected the recent 21 ARCs, the ARC 21 share spot ETF. Can you guys to speak about that? And let me ask this as well. There's a huge narrative that these regulators are against us Bitcoiners and they're trying to shut down everything and not really work with experts like yourselves. So can you just talk about how it is working with the regulator? Is that narrative true? Are they easy to work with, and maybe why they must have rejected the ETF?
So regulators are fun, and I spend a lot of time with regulators. And I said to Hany, every regulator all over the world is a little bit different, and they've taken a different approach to crypto. Most of the people we work with are genuinely interested. They're engaged in the process. They're trying to understand. I think there's a poor narrative that goes around. They know what they're talking about. It's not that they don't know. They actually understand to a large degree what we're doing, what we're trying to accomplish as a sector and as an industry. And I think that's quite a good thing because regulation will come, and it's better that they know what they're talking about when they do it. That being said, I think every country is taking a different approach.
I think there's definitely that where it's a bit different country by country, but I will say this, we've been doing this for a little bit. We launched the first physically backed crypto ETF. So we've had the longest experience running one. And regulators appreciate that, they see that, they ask us for a lot of that
All
data.
your ETPs are backed by the...
All of our ETPs. We have never and will never do a non-physically backed product. It is not part of our philosophy. It is not something that we really appreciate. When you're trying to buy $100 worth of our ETF or ETPs, you expect $100 worth of whatever you're buying. So we plan on giving you that. I would say this though about the regulations globally. In all of our time doing this, the regulatory climate has never been as good as it is now. And there's a lot of headlines that get more clicks, that are more negative, but there's a ton of action behind the scenes, including in the United States. The executive order that we saw from the Biden administration has been incredibly positive. The regulators, and we can't get into the details because a lot of it is respectful and behind the scenes conversations, but we have been very impressed with the respect and knowledge that we have gotten from regulators around the world. We have no interest in going in through the back door. We want to engage with regulators, and it will take a little bit of time, but as we've proven in, at this point, maybe a dozen countries around the world, we'll get there soon, and there's a lot of very positive movements in the background that I think many people don't actually see.
One of the key things that's changed, and you see it not just with regulators, but you also see it with institutional buyers. There's a narrative. Certainly when we started the company and first brought out crypto products, there was this really heavy narrative of, will Bitcoin exist in 3 years? Will Bitcoin exist in 6 months? Are they going to unplug all the mining rigs? Like things that either literally do not make sense, or...
One of my favorite questions.
Right? Like what happens if they unplug everything?
What if the cloud is unplugged?
Like that's not how that works, but okay. So what's changed is that we very rarely get that question. There's not the questions around, is crypto here to stay? Is Bitcoin here to stay? Does it serve a purpose? Does it have a place in the financial world and in people's complete financial pictures? Is it going to zero tomorrow? A lot of those questions, we don't get, and we don't get them from our clients, and we don't get them from regulators. Certainly not the way we used to, and that's a major climate change.
More about risk and hedging now, and kind of how much they should allocate into Bitcoin and other coins. And I saw that I think it was recommended for institutions or maybe in general to have 1% of your capital or investments in cryptocurrency. Has that changed? Is it maybe 5%, 10%? Are people going larger?
So it depends largely on you. It's a very unique situation and what you're looking for, what your risk appetite is, etc. If you go to 21shares.com/research, we actually have a lot of reports that go into what target allocation should be. What does 1% do? What does 5% do? What does 3% do? How do you think about that? And we're very happy to talk with people about that and share that knowledge with them. But it varies and it goes from person to person. And ultimately, regulators aren't really behind any of that because they don't control the end customer and what they're doing. They just need to make sure that the landscape is properly set up so that there are no nefarious actors at the end of the day.
The question around hedging is interesting. That is still very much the thing. So understanding volatility and hedge risk when it comes to settlements infrastructure, which is, again, kind of nitty-gritty stuff, but that's where a lot of time is being spent. Certainly in Europe, as you know, we're looking at listing products on more exchanges and expanding our footprint. A lot of the conversation we have is, okay, that's great. How does clearing work? What is counterparty risk really here in terms of default? How do you think about volatility in the construct of traditional securities risk models? And what's interesting is you actually end up doing pretty well because they have to also benchmark against some really small caps, very high volatility stocks, and so when you start to look at what does the distribution of volatility look like, those are the types of conversations that people are more focused on the hedging and clearing side.
Turns out crypto is a pretty good thing to own.
Yeah.
Couldn't disagree with that. So when you guys are speaking and working with institutions, are any of them utilizing these DeFi protocols, like using their treasury to earn interest? Because we're seeing some very lucrative.
No.
And I wanted to ask this: do you think we'll ever see these institutions offer these products to their clients? Because will they just lose out on potentially the majority of their clients after they get educated and find these DeFi protocols themselves?
I think they will either offer them,
yeah,
or will no longer be in business, because I think it is very clear that consumers have shown that they want these kinds of products. Overall, on the institutional side, it's just a lot earlier than most people realize.
Okay.
An example.
We're still talking about Bitcoin.
We're still talking about Bitcoin, but an example of that is you invest in a DeFi project, lend out some assets. There is a compromise in the smart contract, and there's a hack.
Like we see every day.
We see it almost every day. What is your fiduciary obligation to your clients? And no one has, the answer may very well be they're compensated for that risk and the interest rate. This has been disclosed. It doesn't matter.
But all new insurance types would come out,
but the problem
it's not
is
there
no
yet.
one's answered. The problem is even before that, no one's answered the question yet. Do I have a fiduciary obligation towards clients related to hacking risk? What does that actually look like? What do disclosures look like? No one's battle tested that yet, and it makes people tension.
Yeah, and I love that you brought up the fiduciary responsibilities, so I have to ask the next question. Are institutions hodlers? We see like retail, it's this huge narrative on hodling, till Bitcoin reaches $1 million. Do they have institutions, do they have fiduciary responsibilities to take profits, at some sort of, point after buying the Bitcoin? Or can they just hold it? Or are they just looking for a quick profit?
So it depends on what institution you're talking about, because it's a very large catch-all. Is it a family office? Is it an insurance company? Is it a trading shop? I would say a very small subset of institutions, the hedge funds, the trading firms, etc., obviously are making a lot of trades, but they're doing it professionally. Most institutions we run into are thinking about hodling, a hodling thesis, a model that centers around how do I invest in something that I think will generate a return over 3, 5, 7, 10 years. And I would argue that that's a very, very good thing for the space, because as more institutions come in, we'll have this very strong base of semi-permanent capital, and you can't discount the value to the space.
Interestingly, I had a conversation with one of our largest market makers a couple of weeks ago, and
Can you share how much they're trading at a time?
Yes, they're one of the largest trading shops in the world. I mean, our market makers are huge. By
Billions and billions.
Yeah.
Hundreds of billions on an
Yeah.
annualized basis, kind of.
And one of the things that he was telling me, which I found fascinating, was that from their perspective, institutions are bigger hodlers than retail. Because retail is day trading.
Yeah.
The institutions, the ones who are, there are institutions that are trading vol,
Yeah.
but they're not liquidating the position, they're just capturing the vol and coming back in. So they're trading around the thesis. They're not necessarily actually pulling capital completely out of the market in a
It's
medium
almost
term.
like they're trading off of an algorithm.
Yeah.
That is programmatic and
Do
engineered.
you see the same panic you would see from retail that you see in institutions? Like, they don't panic sell as more like?
I think part of the beauty of the culture around crypto is we've all been through collective pain together. We have diamond hands. We hold on for dear life. Our first product was actually the world's first crypto index fund that was listed, and the ticker is HODL. And so this is very much in, I would argue, in the ethos of the entire community. You get it a little bit with newer people, but very, very, very quickly you understand that the culture is you hold forever, you don't look at the price, you don't panic, and you're buying things that you intend to sell in 5 years.
Definitely, that's my mindset.
And the institutions actually help stabilize the long term reduce volatility. Because think about it logically from their perspective, right? Okay, so I'm an institution, I bought a bunch of Bitcoin at 40.
Yeah.
When Bitcoin's at 38, my thesis is still correct because it's thesis-based investing. I'm going to buy it because it's cheaper than the benchmark, which I thought it was a good buy. So the more institutions come in, the more they set their price marks for what they think crypto is worth, as long as the space continues to develop along fundamentals. So they're developing their own internal analysis as to what the real price is, and they're willing to buy around that. And when you're talking pools of capital, these pools are much larger, they can afford to continue to come in. And so you should see over time more stability in order books, which over the long term actually will reduce volatility.
Makes sense. So I saw that 19 million Bitcoins have been mined. There's approximately 2 million left. You mentioned that institutions are just starting. I need to ask this. What do you think Bitcoin will be priced at? When institutions really drive forward and start accumulating Bitcoin? We saw Michael Saylor's accumulating massive amounts of Bitcoin. Do Kwon from Terra Luna buying $10 billion worth of Bitcoin. I think we will run out of Bitcoins very, very soon, honestly. For people to sell, we're seeing a supply shock. Do you have a price prediction in mind?
So this is all going to be personal opinions.
Yeah, definitely,
but
definitely.
A very fun stat is if you look at the number of millionaires in the world, there's about 45 million. And so there's not enough Bitcoins for every millionaire globally to have one full Bitcoin. That's absurd, but speaks to the power of the scarcity of the asset. I personally think that oftentimes people underestimate how large revolutionary things can get. If you think about any of us in 1993 being able to predict the size of the tech market today, insane. Would never been close. Would have done a fraction of what it actually ended up being because of how disruptive compounding innovation works. I personally think, without a doubt, that in our lifetime, Bitcoin will be in the 7 figures, maybe high 7 figures, low 8 figures.
Awesome. Do you want to add to that?
No, I agree, and obviously we talk about this kind of stuff.
We're bullish.
Yes, we're bullish, and we also do this as a job. So, I think the one thing I would add to that is if you look at the evolutionary history of money, the combination of scarcity, increasing utility, the idea of money not backed by guns, which is the thing people love to talk about in the case of Bitcoin, like how can you have it not backed by guns? It's actually a completely new concept. The idea of a world with a single reserve currency, completely new concept. That didn't exist 75 years ago. Like, some of our relatives were born into a world where that was not true. Like, this is
there were spheres of influence that people oftentimes think was the world, but no. Not everyone was doing Dutch guilders.
No. And so the interesting thing is that I think that narrative gets lost when people think about what the upside case is for Bitcoin in particular. Nobody takes into account the fact that, guys, the monetary reality that we live in, that is largely US dollar dominated, that is largely dominated by government-backed money, that is largely and that the reserve currency happens to be linked to the largest military in the world, all of that is like a last 75 years kind of thing. That's not the history of money, that's not the evolution of financial systems. This is new on a historic scale. And it doesn't mean that it's hard for people to realize that. And so it's very hard for people to contextually put Bitcoin within that narrative. And I think it supports a lot of the price action.
We've never truly had universal 24/7 instantaneous settlement clearing ever. And it's just not on any device, private, self-hosted, centrally hosted. None of this has actually existed.
Would you say Bitcoin's the closest thing we have to it right now?
I would say Bitcoin is that right now, but it's sort of like that quote, the future's already here, it's just not evenly distributed. I think we know about it, but I think the rest of the world will start coming on, not in 5 or 10 years, but also 10, 15, 20 years. If you think about the evolution of the internet, again, the evolution of any very competitive, highly dynamic innovation, it takes a while. And I think it is inevitable that that will reach it, and we sort of know about the party before it's going to happen. But it is much, much earlier than people think, and this will get so much bigger than people think.
And that's why we're so focused on bringing the next company. Because if we all believe in that, and that's the future we're building towards, we see the value in this technology, it doesn't work if it's an insular club, and it doesn't work if it's so technical that you need to actually be comfortable using more technology than your email. Like, that's not how we go from where we are today, which is a incredible innovation that has a wonderful use case and a great community behind it, into something that's ubiquitous. That journey means my grandmother has to be comfortable with this. How do we make that happen? That's where we spend a lot of our time.
Thank you for both of your time. It was awesome having both of you here. I learned a ton, and I'm looking forward to see what 21 Shares and Amun has planned for the future.
Thank you so much for having me.